We're 2 hours into trading on Monday, February 14th. Happy Valentine's Day, everybody. Let's take a quick look at Friday's picks. That's how I like to start each one of these videos off. You'll see that the picks are consistently good. That's because I follow a systematic trading approach. It can be learned, and more importantly, it can be replicated. AA, that was my long pick of the day. You can see how the stock is currently higher. Go into the 5-minute chart. The video came out, I think, about 2 hours after the open. So right in this area here, you can see how the stock is actually higher. That's not what's surprising. What's surprising is the fact that the stock is higher when the market has gone down. That's what we're going to be taking a look at. That is the edge that we have trading relative strength and relative weakness. AA looks good. And it's going to continue to move higher because asset managers are rotating into stocks that are fairly insulated from inflation. These are basic materials producers. They can increase prices to consumers. So you can see how the stock is continuing to push higher. The bearish pick of the day was Federal Express, FDX. You can see how we've got this breakdown below horizontal support. We also have the stock falling below major moving averages like the 200-day and the 100-day moving average. That crackdown and that big red candle that was starting to form on Friday told me that this stock had more downside. Let's go into that chart. Beautiful sell-off here. Video came out right about it here. You can see how much lower the stock has been through the course of the day today. Very nice bearish pick. And I tell you to make sure that you're focusing your shorts on stocks that are in the lower right-hand corner of the daily chart, just like this one. When you're buying, you want to be buying stocks that are in the upper right-hand corner of the chart. This is so intuitive, but I can't tell you how many people do exactly the opposite. Oh, this stock is really strong, so I'm going to sell it because it's so strong. I don't get that logic. That's not what you want to be doing. And by the same token, they'll look at a stock like Federal Express and go, oh, this stock is cheap. I'm going to buy it here. Yes, this is a good place to buy. I don't know why it's a good place to buy it. The stock could be falling like mad. It could be in a watershed event, and people are out there trying to bottom fish. That is not how you're supposed to trade. So until you get a stock that shows you major support levels, so after a big decline, bounce, bounce, bounce that lasts maybe 2 or 3 months where you have a series of higher lows, okay, then we can start to come in and consider it. But it would have to get above the 100-day moving average and show us a nice base that it's starting to rally through, and it would have to get through downward sloping trend lines. Until then, you don't want to be bottom fishing for these stocks. So let's go in, take a look at the market, then let's see if we can find some stocks for today. Price action very, very weak. As I mentioned to you, the fact that Alcoa was actually higher on Friday is a testament to trading relative strength. You can see how the market sold off hard the entire day, but the stock was able to move higher. So if you were bullish and you completely whiffed on the market, you got the market completely wrong. If you came in and you bought the S&P 500 futures thinking that the market was going to bounce, you got your head handed to you. But if you're trading relative strength and you bought Alcoa as a surrogate market position, you actually made money on the trade. It's not often that you can be wrong on the market and make money. 75% of all stocks follow the market. So you have to get the market right. And then you need to get the stocks right. And that's why FDX performed so well. So let's go in, let's run a couple of basic searches. Let's get our market bearings, find out how we want to position ourselves. With this type of market volatility, all I can tell you is you should keep your swing trades to a minimum because the market is all over the board. It's not just down, it's up and down. On any given day, it could gap either way. You can see that in the daily chart right here. Long green candles. Here we go. Here we go. This looks great. bottom falls out. Oh, here we go. This is a great gap here. Oh yeah, this one for sure. This is going to be the one. No, this type of volatility, keep your longer term swing trades that have a 2 to 3 week duration to a minimum. We can't trade this. We could easily come down and test the support level right around SPY 430 or so. We're already through the 100-day and 200-day moving averages. I can put those up very quickly for reference points. You can see how we fell through the 200-day moving average on Friday and we closed below it. We're starting to close below these major moving averages with greater frequency. Look, we could barely even get back above the 100-day moving average. I'll tell you that over the course of the last 2 years, we've barely spent any time at all below the 100-day moving average. Go back and check a chart. Now look, can't even get above it. We've been below it for almost a month now. That is a bearish sign. That's a sign that the market is transitioning, that we are not in a go-go bull market anymore. So the fact that we're below the 200-day moving average tells me that it's going to be fairly difficult for stocks to rally. If we look at TLT, that's the US 20-year Treasury, you can see how those have broken major horizontal support. Bonds go down, that means interest rates are going up. The Fed is probably going to hike rates 50 basis points in March. Now that has doubled in just the last week, because a week ago they were looking for a quarter-point increase. Now we're already to a 50-point increase. That FOMC meeting is about a month away. Also, Fed officials are starting to talk about the fact that they're going to need to hike again and again, and the probability of a full 100 basis point move, that's a full percentage point, in July is at 100%. So that would mean a 50 basis point hike, 25, 25, that would get us there. The market does not like shocks. This is a shock. The Fed got inflation wrong, flat out. They got it wrong. They called it transitory. They believed that supply disruptions were causing inflation. They removed that language from their statement, and now they're playing catch up. The market doesn't like that. Yes, there is tension in Russia and the Ukraine. And that's also weighing on the market a little bit, but in general, those conflicts tend not to weigh on the market. So let's take a look and see what we've got going here. We'll put that 5-minute chart back up. Take a look at where we think the S&P 500 is going to go. Right now, my bias would be on the downside. You can see that we've got a nice, strong, downward sloping channel here. You can visually draw it. We're probably going to stay within that channel. We've got a 10p spike right now. When it starts to get very extended like this and then it rolls over, it is a predictive indicator. You'd want to draw an upward sloping trend line here. When you get that rollover and you get the breach of the upward sloping trend line, then you know that we're due for a bearish cycle and that the market's probably going to head lower. Just like we had in here. Nice little bounce up in here. We get the bearish cross right in there, and then woof, the bottom falls out. So in any case, I'm not looking for a big market rally right now. I feel that the fact that we're below the 200-day moving average, asset managers are going to put their wallets back in their pockets. They're going to be waiting to see what happens in Russia. They're going to be waiting to hear what the Fed has to say, and we do have Fed speak this week. So I'm favoring the short side. Market's been all over the place. Let's find a long that we like. Let's find a short that we like. And then based on what the market's doing intraday, we can trade. By the way, tiny, tiny compressed candles in here. Mixed candles all day long. No real movement. We're pretty much where the market opened today. Don't expect a lot of fireworks today. So let's go in and see if we can find a bullish stock that we like, and then let's see if we can find a bearish stock. I'm going to go into swing, and I'm going to go into pop plus bull. I go into pop bull, I don't get any candidates today because the market's been drifting lower. And it's been very, very quiet as well. So I'm going to go into pop plus bull. These are stocks that were on the list Friday. We're going to take a quick look. I've already got a couple of them in my sights. EXPE, horizontal breakout right here, big volume, earnings after the close. So these earnings were Thursday after the close. Look at that gigantic spike on Friday's open. It gave all of those gains back, but the market was very weak. But look at it today. It's trying to bounce in here. The stock wants to move higher. I like it. Didn't particularly care for that big bearish engulfing candle, but the stock does want to move higher. This is nice. Downward sloping trend line, breakout to the upside. This is letter Z, Zillow, but lower right hand corner. Yes, it's had a chance to form a base. There's nice support. We break that support and we make a marginal new low, meaning it wasn't much lower than that low. And then we have a higher low double bottom. Yeah, this is when you can start nibbling on stocks if you are a longer term investor and if you're looking to buy stocks that are down on a major support level. As a trader, I will day trade this, but I'm not overly excited about taking an overnight position in that stock. Next one on the list, LVS. This is going to be my pick of the day. Now let me provide a caveat here. I like basic material stocks right now. That is where I would focus my overnight swing positions on the long side. Those are in energy stocks, stocks like Alcoa, some of the coal names have been good, fertilizers. Those are the types of companies I would be focusing on. But I've already given you a lot of those names. I'm trying to find something in a different sector that could work for us. LVS fits the bill. We've got a nice upward sloping trend line here. Stock has been able to get through the 200-day moving average. You can see that support level was able to hold last Friday, even when the market was down big. And today we've got this nice long green candle that's breaking out to a new relative high. Yeah, I like it. You've got your earnings back there. I like LVS. This is also a horizontal resistance level here. Put up the crosshair tool and you can see resistance, resistance. Now it is support. Nice. I like LVS. Let's take a look at the 5-minute chart. And there you go. You can see nice bullish flag formation here. Stock runs higher, stack long green candles, downward sloping trend line. This is your entry point. Beautiful. Now it's getting through the prior day's high as well. So I like LVS. I think that stock is going to continue to perform well. So what do I do with this pick? How do I trade this, Pete? I've got this stock. Now what do I do? Well, first of all, you take a look at what the 1OP indicator is doing. It's extended. This is a very long-term bullish cycle. So you do not want to be buying stocks when you're at the very top of the cycle. This cycle is just about over. We are going to get a bearish cycle. So why don't we wait to see what happens with the market during a bearish cycle? 80% of the time, this indicator is going to correctly predict what the market is doing. So right now, we want to see if this bearish cross will result in a market decline. If the market declines, what do you think LVS is going to do? It's going to sell off. And what we would like to see is the market down, 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 and the stock maintaining its strength. Long red bar right here. What is the stock doing? Yeah, it pulled back temporarily and then boink, right back up. That tells me the buyers are there. This wouldn't be a natural place for profit taking after a nice run like that. So the profit takers, the sellers, are instantly met with buyers, and that's what keeps the stock afloat. So you would want to wait for this bearish cycle to run and see if you can enter LVS at a better price and also monitor its relative strength. So let's take the 1OP indicator off and let's swap it in for 1OSI, which measures relative strength. Orange line above 0 equals relative strength. Beautiful. That's what we want. So no, you do not rush in and buy LVS 2.5 hours after the open, which is where we are right now. You wait to see what kind of damage this bearish 1OP cross does. And if the market finds support at the low of the day and it starts to bounce, okay, well then you know the coast is kind of clear. We got a nice support level in here and you can come in and you can buy LVS. If you got a little bit of a dip and it still preserves its relative strength, it's going to lead the market higher. And we know that because we love the daily chart. That's how we do it. So let's find a short that we like. Let's use the same search, go into Pop Bear, see what we got coming up there. Take a look at Pepsi. That's a nice horizontal breakdown right in here. I like it. Earnings before the open, but we've got the 100-day moving average that's going to lend support. So I would not want to be shorting Pepsi. Ah, here's a nice one. Downward sloping trend line, very pronounced decline. Horizontal support, 100-day moving average, breach to the downside. Put up the 5-minute chart. Yes, you can see Pfizer's been drifting lower all day. So Pete, what do I do with this one? Well, you've got a bearish cycle setting up on the S&P 500. So what you'd want to do is you'd want to start setting some alert lines here. So click alert, click on the bottom of that candle, click alert, click on the bottom of that candle. Okay, so now if the stock starts to roll over and come in and show me some relative weakness, right now it's strong relative to the market. I want that to change. I want it to be weak relative to the market. Then I'll have a nice candidate on the downside. I already know I like the stock on the short side from a daily perspective. Let's go in and see if we can find something that's got relative weakness right now. Walmart, Cisco, I know a search that I'm going to go into. I do like the chart on Pfizer, and I think that's probably going to be my short. No, that had the 100-day moving average, so it would be, let me double check here. Actually, yes, we got the 100-day moving average that we're below. I like Pfizer as the short of the day, but let's see if we can find a day trade right now. So I'm going to look for a stock that's been weak relative to the market on a 30-minute basis. And we're also going to be looking for a red 5 here. That is our sell signal. So first of all, what's the market done in the last 30 minutes? Generally higher. So these stocks have been weak relative to the market in the last 30 minutes. I'm just going to click through, take a look, see if I can find a nice bearish chart. Resistance at the 200-day backed off. There you got a nice upward sloping trend line that's been violated to the downside. ENPH looks like it could be a nice relatively weak stock. I'm just going to click through, just looking for some nice relative weakness. Adobe couldn't get off the deck. That could be a good short. That could be a nice short. So I'm just looking through the charts. I'm going to stick with Pfizer for one reason. The market's really not doing anything right now. I need to make sure that I've got that weakness. And Cisco also, I noticed, was very weak. You could see those stacked red candles. This is a sign of weakness. Strong trend strength to the downside. So you've got to wait for this to run its course. And as soon as the market starts to soften, the stock should roll over. And if I drop my alert lines now, I'll know when that happens and I don't have to park on it and watch every tick. I can move on. Cisco, really nice. Look at this. So the market moved higher. What did Cisco do during the last 30 minutes? Nada. Couldn't get going. Relative weakness. Let's put up that daily chart. Break down below horizontal support. Never could get through that 200-day moving average. Gap down. Yeah, Cisco looks like it could be an excellent short today as well. So I really like that Pfizer short. It just is not showing us relative weakness right now. So I would be keeping an eye on Cisco and Pfizer on the short side. On the long side, I like LVS. If you found this information to be useful, please leave your comments, leave your replies. I'm going to be focusing more on educational content. I will still give you maybe 1 or 2 videos per week where I go through the entire process like I did right now, and I'll highlight some picks. But in general, I really want to be focusing on educational content that will help you longer term so you can come in, learn these lessons, and then you can start putting the pieces together when I do record a video like this. So please leave your comments because it'll let me know which educational areas I need to focus on. Thanks. Good luck with your trading. Tread cautiously out there. Market looks like it wants to test the downside right now. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.